Next week is setting up to become one for the history books. A huge disconnect has emerged between Main Street and Wall Street, with those in the general population wondering how it's possible the S&P 500 is having up days considering almost every single non-essential business is completely closed. When we add in all the damage that has been caused and will continue to be caused, there are many folks left wondering how their puts are not printing and why the market only seems to go up even after shocking jobless numbers and death statistics. The week of April 27th is going to see some huge names report for the first time post-coronavirus. These earnings calls will likely have a massive effect on judging how much economical damage has already been done to Wall Street. 3M, Starbucks, Alphabet, BP, Facebook, Microsoft, Boeing, Twitter, McDonald's, Apple, United, and Visa, and much, much more. Giants in a wide array of industries are set to announce to investors what their plans are, what they're expecting, and how much damage has already been done. On top of these earnings calls, there's going to be a wide array of economic information that will be coming out, which should only encourage volatility and cause even more disturbances to the market. This brings me to my play, Starbucks. Currently trading for $75.58 per share, the stock took a plummet from $99 to about $50 a share in late March. It has since made quite a recovery back to its current levels. Starbucks is set to announce earnings on April 28th and is coming in as a hot stock on the rise, so I decided it was the perfect opportunity for an earnings play that I feel relatively confident on. Pre-coronavirus, this was an excellent company on the rise with revenue figures, new store figures, and receipt amounts all on the rise. With brand loyalty rapidly increasing, Starbucks coffee can't be compared to many others. It's a daily life essential for much of the population as it's engraved itself in American and worldwide culture as the coffee brand. Its logo carries serious weight and its prices reflect that. With some of its menu items approaching the $6 mark, it's not the taste, but rather the branding/marketing and customer service that really pushes Starbucks to the next level. With a healthy financial sheet pre-coronavirus and a decent 2.2% dividend yield, this is a stock many saw that could potentially double or even triple given their entrance into the Chinese market. But of course, with everything else, coronavirus hit and the numbers have obviously slowed down. Our focus in this play will be on its last quarterly report, which was announced January 28, 2020. Financially, in Q1 2020, Starbucks killed it with 9% global revenue growth, 539 new stores, a 6% increase over the prior year, American store sales up 6%, a 3% increase in average ticket, and $1.6 billion returned to its shareholders through a combination of share repurchases and dividends. While it should have exploded in price from there, it didn't because during the Q&A session it was clear that something was brewing in the world that could seriously disrupt its business. Starbucks, due to its exposure to the Chinese market, was one of the first companies to publicly acknowledge the coronavirus as a serious threat to business. During the Q&A, multiple questions were asked regarding the China situation. John Culver explained at the time, quote, "We currently have half of our stores closed in the Chinese market," end quote. With the coronavirus, they are not revising guidance at the time until they get more clarity on the situation. From there, they will transparently communicate with investors. In total, during the call, coronavirus is mentioned 9 times. Since then, Starbucks has come out with letters to shareholders advising them of the situation. The most recent one came April 8th, nearly 3 weeks ago. In the letter, Starbucks states a couple of very important points. Starting off with China, the coffee giant indicated that 95% of its Chinese stores are back open as of April 8th. Good news, but the sales trends have shown that the sales recovery is slow, with comparable store sales declining 65%. However, they see more evidence reinforcing the belief that the business will fully recover over the next 2 quarters. For example, in the last week of March, comparable store sales declined by 42%, representing the 7th consecutive week of sequential improvement. Note this fact for later. On the American side, at quarter end, 58% of U.S. company-operated stores were drive-through locations, of which 76% were open. Additionally, approximately 55% of U.S. licensed stores remained open at quarter end. This was of course written on April 8th, And as we will see later, I believe these numbers are a lot worse as we now approach the beginning of May. At the end, Starbucks gave a definitive number saying as a result of the virus, Starbucks' preliminary estimates for Q2 FY20 GAAP and non-GAAP EPS are approximately 28 cents a share and 32 cents a share, respectively. So, in essence, they have set the bar pretty low. But there is more to be said. At the end of the day, April 8th was a long time ago in 2020 time. Things have changed dramatically, and the virus numbers and state shutdown procedures coming out of the United States have dramatically altered the state of business. For example, if we look at the Pittsburgh City core area, which consists of 11 Starbucks stores, 9 out of the 11 are completely closed, and only 1 out of the 2 that are open or working full-time hours. This is evidence that counters the official claim that only about half of all stores are closed. The reality is much worse, and when you consider that most stores are drive-through only and limited hours, the reality sets in. Starbucks is looking at a catastrophe. With no vaccine in sight and the potential second wave in the winter, its store business is under immense pressure. And with a run-up into earnings, the chances of an earnings pop are slim to none. Even when stores open up, the comparable sales data will be low. Nobody wants to sit in a coffee shop with a mask on. And while drive-through numbers can help, the truth is in your face. There is no way Starbucks can expect to return to the growth numbers they were experiencing before the coronavirus, the numbers that drove the price to nearly $100 a share. This is why I've decided to make a small earnings play buying 2 different puts, both expiring May 1st. The first is the $60 level, and the second is the $70.50 put. While the IV is really high, I believe next week is special and one for the history books. I believe under the right circumstances, Starbucks could easily plummet 40%. Thank you guys for watching. I hope you can click the subscribe button if you enjoyed and want to see more content like this in the future. Let me know if you guys are joining along in the comments, and see everyone April 29th after the earnings announcement.